Hello and good morning, ladies and gentlemen. Here with Martin Paniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session markets outlook. Starting as usual with the North American markets. Yesterday, the Dow Jones moved a little bit by 5 points negative. Nasdaq was also a little bit negative, 25 points down. And of course, the Dixie index is slightly up to 96 from 95.70. Yesterday, US CB consumer confidence up from 96.7 to 101.1 in August versus 97.2. Canadian current account deficit widened to 19.9 million Canadian dollars. Canada's raw materials price index is down 2.7% versus projected 1.3 drop. And Canada's industrial production price index is up 0.2% versus 0.1 expected. Mixed data from Canada. Over in Great White North, the current account deficit widened to almost 20 million Canadian dollars from previous, billion from previous 16.6. A shortfall, which was already upgraded from the initially reported 16.8 billion. Components of the report revealed that this was spurred by weaker export activity, but that foreign investment in the country remained afloat. Underlying inflation readings were also in mixed bag. The raw materials price index posted a sharp 2.7% decline, more than double than the estimated 1.3% slump, while the industrial production price index rose by 0.2% instead of showing the projected 0.1%. On less downbeat note, the previous period's readings enjoyed small upgrades. Yesterday, the U.S. consumer confidence data came out. The August CB consumer confidence index landed at 101.1, its highest reading since September last year versus the estimated 97.2 figure, up from the previous month's reading, which was downgraded from 97.3 to 96.7. This rise in optimism suggests that the consumers could keep spending their funds in the coming months instead of keeping their hands in their pockets. This also suggests, so to speak, that the personal spending and income figures, which came out in line with the expectations for the month of July, could continue to see positive momentum moving forward. Bear in mind, please, that the Fed chairperson, Ms. Yellen, showed her hawkish cards in the Jackson Hole Symposium last week. So traders are hopeful that upbeat data would keep the U.S. Central Bank on track towards hiking interest rates quite soon. In terms of movements, the US dollar versus the Canadian dollar, the loonie, 75 pips up yesterday. The US dollar versus the Swissy, 50 pips up yesterday, and versus the yen, 105 pips up yesterday. Today we have the ADP employment change. We also have the Chicago Purchasing Managers Index and a couple of reports on the property market segment. We also have the gross domestic product for Canada month on month and the annualized quarter on quarter. This would be pretty much the coverage for the North American markets for today. With regards to the European markets, yesterday the DAX 65 points up out of nearly 130 range. The CAC 40 is also 20 up out of 45 range. Second day of uptrending of those two major European markets in the European zone. The consumer sentiment minus 8.5 as expected and minus 7.9 previous. Eurozone business climate index 0.02 versus 0.36 expected and 0.38 previous. Eurozone industrial sentiment minus 4.4 and Eurozone economic sentiment 103.5 versus 104.1 expected. The German preliminary HICP month on month was again negative. The month on month and the year on year reports came out a little bit negative yesterday. Swiss KOF leading indicator 99.8 versus the 102 expected and 103.5 previous reading. The upcoming events for today. For the Swiss franc, the UBS consumption indicator, which already came out positive, 1.32 from 1.21 previous. German retail sales year-on-year dropping to minus 1.5%, and retail sales month-on-month up to 1.7 from minus 0.6. Unemployment reports are due for Germany, unemployment for the European zone, CPI reports as well for the European zone, and reports of employment and unemployment all throughout the European zone, along with CPI reports as well. Moving to the UK market, yesterday the FTSE 100 was 24 points up, closed at 6,824 points. This was yesterday. The consumer credit, £881 million weaker than expected. Mortgage approvals also weaker than expected, 988. And consumer confidence, 1 point better than the minus 7 previous. The net lending to individuals also came out £3.8 billion today. Money supply 1.2% and money supply year on year 3.9%. Basically, fewer UK mortgage approvals and consumer credit accounts. This is what, according to the report released by the Bank of England, the number of mortgage approvals in the UK for the month of July was only 60.9 thousand. This is below the 61.9 figure and down from the previous 64.2. This is the lowest reading since January of this year and implies that the UK's housing market is a little bit cooling down. Meanwhile, the consumer credit in July only rose by £1.2 billion, missing the expected increase of £1.7 billion. Moreover, this is below the previous month's £1.9 billion and a weakest increase since August 2015. The nationwide housing price, this is month on month and year on year. Both reports are due to come up today, a little bit later from this point. Moving to the Asian Pacific markets, yesterday the Nikkei 225 was 163 points up, keeps on surging today. Yesterday we had industrial production month-on-month preliminary data. It came out weaker than expected by 0.8%. And industrial production year-on-year preliminary report 2.3% weaker than previous at minus 3.8%. Annualized housing starts for the July 1,000 lower than previous. Housing starts year-on-year 1.5% better. And construction orders year-on-year again weaker than the previous. Mining stocks led to declines among Asian equities outside of Japan, as a resurgent dollar put gold and industrial metals prices on track for their first monthly losses since May. Japanese shares rose as the yen held near 1 month low, brightening prospects for exporters. Weak Japanese data and prospects of the Fed rate hike dragged to low-yielding yen lower across the board. We also had the New Zealand ANZ business confidence, which came out down from 16 to 15.5 points in August, and the Aussie private sector credit up by 0.4% as expected versus 0.2% previous. Tomorrow, we'll have the foreign bond investment and foreign investment in Japan stocks reports for Japan. And we also have the non-manufacturing PMI for China and the NBS manufacturing PMI for the month of August. We also have the Caixin manufacturing PMI coming out tomorrow, and also the retails reports from Australia. Moving to the commodity sector, the S&P 500 index had a range of 130 points, closed with a negative 60 points. And the current price, the current feed is 2,170. Natural gas, 0.6 cents movement. Crude oil, 80 cents down yesterday. Silver was minus 24 cents, closed at 18.63. Gold, 17.30 range, ending the session losing $11.50. Weaker oil prices as well, with the OPEC September meeting looming. The market watchers are paying very close attention to crude oil price action. Yesterday, The crude oil was down by almost 80 cents to 46.25 per barrel for the day, even as Iraqi's prime minister noted that they would support an all output freeze if the OPEC guarantees on it. This is pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.